Juggling multiple debt repayments can be overwhelming. Different interest rates and payment dates can make it hard to keep track of when and how much you need to pay each month, which can make managing a monthly budget near impossible. If you're in this situation, then you might want to consider debt consolidation loans, which, in the right circumstances, can make your debt repayments more predictable and manageable. They may also help you to reduce the amount of money you pay each month. In this video, we'll break down everything you need to know about debt consolidation loans so you can assess whether they're right for you. So, what is a debt consolidation loan? Well, essentially, it's a way to combine all of your existing debts into a single loan repayment. So instead of managing several repayments each month, you just need to make one payment to a single lender. There are two types of debt consolidation loans: secured and unsecured. Secured loans are when you borrow against an asset. Usually this would be a property you own and often referred to as a second charge mortgage. They may offer lower interest rates, but would put your home at risk if you're unable to keep up with the repayments. Unsecured or personal loans don't require collateral for security, but often come with higher interest rates. So, let's look at how these loans work in a little more detail. Let's say you've got some credit card debt, an overdraft, and a personal loan. This will probably mean that you have 3 different payments going out of your bank account each month, each with a different rate of interest. With a debt consolidation loan, all of these debts could be merged into a single monthly repayment with one interest rate. So, how do you know if a debt consolidation loan is right for you? Well, it all depends on your situation, and only you can make that decision. But with that said, here are some potential benefits. Firstly, a consolidation loan means you stop juggling multiple payments with different dates and interest rates. Instead, you'll just have one repayment to remember, making things easier to manage and less stressful. Secondly, you may be able to secure a lower rate of interest than your current debt obligations, which should save you money in the long run. Another benefit is that if your loan is restructured over a longer period, you may benefit from lower monthly repayments, which may improve your cash flow. And finally, your credit score should improve over time if you make all your payments on time and don't take on any more debt. But there are a few important factors to consider before you jump in: your financial situation, interest rates and terms, impact on your credit. For one, you need to assess your financial situation. A debt consolidation loan might lower your monthly outgoings, but it could increase the length of time it takes to pay off the new loan if you extend the repayment period. Second, compare interest rates and terms carefully. Use loan calculators to work out the total cost over the life of the loan. If you're unsure about anything, get some help from somebody you trust. And thirdly, understand how it might impact your credit. While a consolidation loan can help your credit score in the long run, applying for new credit can cause a temporary dip. It's also important to remember that debt consolidation loans aren't the only solution. There are plenty of other alternatives, such as bank transfer credit cards, which often offer very low or even 0% interest rates. Moving your existing credit card balance to a better rate could help you pay off your debt faster. Most bank transfer credit cards do charge a small fee for transferring the balance, so make sure to check the small print before you apply. You could also negotiate directly with your lenders who may be willing to work out a new repayment plan. And you can always speak to a debt charity for free advice and support. Ultimately, it's important to remember that there is no one-size-fits-all approach when it comes to managing debt. A debt consolidation loan might be the key to finally tackling your debt, but it could also easily make things worse. As such, it's important to do your research, understand your financial position and your options, and choose a route that's going to benefit you the most long term.